You are listening to ChartingWealth.com for Thursday, the 11th of August, 2016. We're going to jump right into the market again, try to keep it at 10 minutes or less, as we promise you we're going to try to do every day, because we ask you to spend 10 minutes with us in the market every day using your worksheet, which you can find at the website. You sign up for the email, we will send it to you. Want you to fill that out every day. Also, if you're new to the program, get our daily email. Go to chartingwealth.com, sign up for it. We will also send you the charting layout, and we will send you the link to the How to Read a Stock Chart video. You need all of those in order to start doing what we do. And what is that? We teach you how to read a stock chart. If you can read a stock chart, we say it is your roadmap to riches. Think about being able to determine where the market is going to go, being able to do it accurately. You won't be able to do it every time because strange things happen. But when you learn to minimize losses, maximize gains, and only get into the market when it makes good sense, when you practice enough doing virtual trades like we tell you to do, and you get good at it, you can make your own decisions. Again, the caveat, we're not a stock calling service. We're an education firm. We want you to practice with us. When you get good enough, you can start making your own decisions. Now let's jump right in and see what's going on with IYY. It is the iShares Dow Jones U.S. Total Market Index Fund. We always start with our two-day chart. We see the derivative oscillators continuing to lose energy. We see the MACD moving near the signal line. The market was technically down for the day 0.25%. We are looking at a two-day candle that ended on the 10th of August, and we see a large wick on top, larger than it was in the previous day when the market was up. That wick represents the loss in the price of the total market. Again, down for the day, 0.25%. It could be topping off. We've talked about that. If you listen to our weekly review and forecast, you know that we've had 3 weeks going on 4 weeks of the market topping out, slowing down. Is it going to cross over going down? It may. We're in an election year where historically the market moves up, but remember, we're getting ready to move into September and then October. All market crashes have occurred in that month, the month of October. So be apprised to be careful. So what do we see going on when we look at our 4-hour chart? What happened intraday? Well, intraday, we saw the market down in the morning and down even further in the afternoon, still above the 2-day trend line. However, we do have a crossover going down on our 4-hour chart. Now, let's go back to our 2-day chart, and let's take a look at the S&P 500. It was down the same amount, 0.25% for the day. Derivative oscillators also lost speed, and the MACD is converging on the signal line. Don't have a crossover yet, so we still call the market up. We still have 2 up candles for the last 4 days. If we look at the 4-hour chart, what do we see going on? We again see the market moving over and getting very close to the signal line, and it crossed over in the afternoon going down on the short-term chart. So those of you who have been in and made virtual cash as the market crossed over and went up, you should have been following along. Hopefully you set, as we talk about, your email triggers, your alerts, or your text alerts so that you know when the market hits certain levels. Again, we do not believe in using stops. You use stops, they can get rated and take you out the market much earlier than you would otherwise have liked, but alerts are the best way to do it. We have a great training at the website on that, why we don't use stops. So please make sure to listen to that, but do be on alert for that down move on the 4-hour chart. Now back to the 2-day chart, and we're going to go and take a look at the Qs. It was also down 0.25% for the day. It's about time to redraw our 2-day trend line. Again, we still have up movement on the candles, but it was a slightly down day. We're connecting at least 3 of the candles with our redrawn trend line. We see that the MACD and the signal line are still nicely apart. Derivative oscillator, excuse me, like our other 2 indexes, is losing some momentum. If we look at our 4-hour chart, we can see, of course, that we have 2 down candles, not as down as the overall market and the S&P were, but we do have that crossover going down in the morning, and we do have the derivative oscillator heating up. So some real down energy on that short chart. So those of you who've jumped in over the last couple of weeks and been doing well in the Qs, again, we gave that cautionary warning back when the Qs dropped down on the 2nd of August. Be careful as to what's just occurred. Not as nearly as much down movement. The market did roll back around. Just be aware of it. Be careful. You don't want to lose everything you've gained. It's always better to be careful, take your profits and run, than letting them run away. Okay. All right, let's go now. Lastly, going to go back to our 2-day chart. We're going to take a look at gold, which was up 0.47% for the day. Gold still in a confirmed down move on the 2-day chart, having crossed over going down on the 6th. We do have a lot of indecision on this last 2-day candle. It's what we would call a star, almost a doji. Lots of indecision. It is a green candle for the last 2 days, but it looks like a cross. Now, if we go to our 4-hour chart, what do we see? We see that it's not crossed over yet, going up, but our 4-hour chart has boded quite well for us of recent, and we will watch and see if indeed it does cross over. Pay attention, see if gold crosses back over going up. If it does on that 4-hour chart, you might consider practicing and using it as a trading chart since it has worked over the last many trades since it stopped working toward the end of 2015. Well, folks, that is where we are as we wrap up the markets. Hopefully you are using your daily worksheet, following along with us. We only ask that you do a couple of things to help us. Would you do us a favor? Go to YouTube and subscribe to our channel. That is the Charting Wealth channel. We're getting closer every day to 1,000 subscribers. We have thousands listen every week. But when we hit that hardcore 1,000 subscribers, YouTube will allow us to do proprietary broadcasts. To who? To you subscribers. So please help us out there. Additionally, if you've not already signed up for our iTunes, if you haven't subscribed there, please do that at iTunes. Give us a 5-star rating. Say something nice about us. That helps us a lot in the metrics. You guys have knocked us up as high as 6 or 7 in the world in stock charts on that search term, and we thank you so much for that at iTunes. It does help us out a great deal. And don't hesitate to go to chartingwealth.com, our channel. Check out all the information there, all the training. You can also email us and tell us what else you need, and we will try our best to help you. Thank you so much for being with us. We appreciate you. Hope you appreciate what we do. 10 minutes a day is all we ask. If you do this, not just occasionally, but every day, you will gain the knowledge and the skill set you need to be able to read these charts. And they are truly a roadmap potentially for your future of riches. So please, again, this is what you've got to do. How do you get to Carnegie Hall? Practice. How do you learn to read the charts, the stock market? Practice. Practice with us every day. God bless. Take care from chartingwealth.com.